Alright, welcome backtest edition. So over here I have this gray box. No one delete it because we're gonna be having a quick review about the price action around that area. But before then, let's focus on what we have currently here. And this is the weekly time frame for gold. This is gold. Want to do a quick back test of what you can expect the next candle to actually do. So trying to have a read is we did have this drop lower, then we had this sweep of liquidities below these lows. We had lots of liquidities resting below there. Those liquidities were swept, then of that point we saw the market reversing. So this low has been maintaining. We don't have actually a fair value gap being formed in this push higher, which isn't really a good thing to see, because if you are expecting a continuation, what you want to see, or a push going higher, what you want to see is formation of fair value gaps. But how can we navigate through these type of price action, because things like these usually happen? So after we had swept those liquidities, we saw the market consolidate a little bit over here. Then we saw this candle forming a bullish engulfing candle, and a bullish engulfing candle is usually when a candle sweeps the prior candle's wicks low and then closes above the opening and the closing price, right? So for this next week, what we wanted to see, or what we want to see after an engulfing candle has been confirmed, is a continuation going higher, and we saw that continuation going higher. But also to determine from what area did we see that pricing pushing off. Usually love to use my fib levels from the low of that candle to the high of that bullish engulfing candle. What we saw is price pushed deeper into below that 0.5 level, which is a nice thing. That's what I usually want to see of a bullish engulfing candle, is price either to tap the 0.25 or the 0.5 level. For this situation, we tapped into the 0.5 and also the OTE levels, which is a good thing to see. Also, to talk more about this price action around that point in time, is for this next week, after that fair value gap had been confirmed, want us to mark the low that had been swept. So we have the low that has been swept, and then we are seeing this bullish engulfing candle play out. So before we even continue, let's start with how these candles are printed. So I will replay that. Remember, we have seen this to be a bullish engulfing candle, whereby the candle has already cleared the previous candle's low and closed above the opening and the closing price of the prior candle. Now we want to see whether we can expect a push going higher. The first target will be this one, then the next target will be definitely be this one, because this high has already been taken, and since we have this low being maintained, want to go and read a price action around this area to see whether price will be pushing towards these high, the first high, then later on we can see whether price will push towards those highs. And now the engulfing candle, we will be watching around the 0.5, and I think the 0.25 has already been will be definitely tapped into, because this candle I think closed below the 0.2 level. And now, since we are in the weekly time frame, what is my context area? My context area will be this immediate rebalance line, which is kinda overlapping with my opening at the closing price of that candle. So since we have that, I will be watching whether we can have a sting into it. Then around the 0.5 level, expect that push going higher. Let's see what the daily has. A quick load, we give it some time as it loads. right? There we go. So what we can see as of Friday, what this Friday we had that drop lower and we formed that bullish fair value gap. So also we need to have that bullish fair value gap labeled. So from this candle's high towards this candle's low. Remember, we have this as our weekly fair value area, not immediate rebalance, I mean, of which we want to anticipate a sting into it, then maybe a push higher. And since we have a fair value gap aligning with that, then it's an ideal area for us to react off of. But also monitoring the third candle, how it did print out is that's a deep retracement candle that confirmed a deep retracement fair value gaps, and these are the types of fair value gaps that are low probability because the momentum now seems like to be shifting bearish. And whenever we are in these kinds of scenarios, then what we need is actually more confirmation for price to push higher, because we are long term. You can see prices are kind of bullish. We are forming higher lows as well as higher highs, as well as we are breaking through these order blocks. Also we are creating market structure shifts. So from the weekly we have formed a bullish engulfing candle, which is the first bullish argument, and then secondly we have the daily argument being more of bullish, though we have a bearish argument with this candle having that deep retracement. So for the bullish argument, we have a bullish structure, higher highs and higher lows. We have order blocks that are being formed. We have also breaker blocks that has been confirmed, right? So we are having a more bullish argument compared to this one single bearish argument of this deep retracement down close candle. We also have a bullish fair value gap, which adds into our confirmation or into our other confluences that we are bullish. So at this point in time, what should we consider? So we are expecting of this area, also maybe of the 0.5 of the weekly bullish engulfing level, to expect a push going higher. So having identified that, so we'll need to drop onto the lower time frame and maybe onto the 4-hour time frame and see at during the New York time what could have already have happened. Remember, want to be trading only during the New York session, and as we can see is during Sunday the market dropped lower, have already traded into these fair value gap. That's the 4-hour time frame. What you can see is the market has already traded deep into that fair value gap. All right, so what we can see into that 4-hour daily fair value gap, Sunday has already traded into it. We have already reacted into that weekly immediate rebalance, of which we can also anticipate a push going higher. But remember, we have the 0.5 level, which is the weekly bullish engulfing level that we'll be watching for. And also what we're seeing is we had this 4-hour fair value gap that was traded into. We have this 4-hour fair value gap that is yet to be traded into. Remember, we want to engage in prices going higher. So around I want to see by the New York session what would have happened. Remember, the New York session usually starts around 7, but for the for gold, what I usually want to see is to catch the 9 a.m. candle expansion. So at around this time, this is the 5 a.m. So 5 a.m. candle to 8 a.m. candle, so that by 9 a.m. New York time, want to see whether that will be happening. So price has already tapped into that weekly immediate rebalance. What you're seeing is we don't have nice displacements going lower, right? We only had this fair value gap that was formed, a sting into it, then we drop lower. So our context area will be around this area, and more specifically the daily fair value gap, and as well as the 0.5 level. But what we're seeing is we haven't really had any signs of reactions of this area, so we wait for more prices to form. So one more candle Nice. What we're seeing is, as of the 1 a.m. candle, is we have fully filled that daily fair value gap, of which we now I will get rid of this because it has already been traded into. Don't have to have lots of markups, and also ensure that I've trailed these right there. Right, so what you have seen is, as this moment in time, we have already stung into that daily fair value gap, also the weekly immediate rebalance that I've gotten rid of. We have already stung into that 0.5 level of the weekly engulfing level, of which we want to see whether the market will show a sign of going higher. And one of the bearish argument that we have is we have these fair value gaps at the 4-hour fair value gap that has been confirmed, but we don't want to use this fair value gap to sell towards this, because the higher time frame is giving us bullish momentum. What also I'm noticing is we have a 2 candle rejection of this weekly fair value gap. If this daily fair value gap, if I ensure that we have the midpoint shown, all right, there, so you can see we have the middle, this fair value gap, the middle. What you can see is these candles are closing above the midpoint of that daily fair value gap. And also you can see that we have a 2 candle rejection, whereby this candle swept the previous 4-hour candle low and did reject higher, and we did close above the midpoint. So we wait for the next 4-hour candle. We have now both bullish and bearish arguments inside the 4-hour time frame. What we want to see in the next, if you are bullish, want to see a disrespect of these bearish candle, and also want to see a confirmation of maybe candle closing above this up close candle. So that didn't actually show up, right, during the 5 a.m. candle. That didn't show up, and at that moment in time, there is no need actually to be trying to look for the next displacement, right? We need to wait for more confirmation during the New York time, right? And that's where I usually love trading during the New York time or the 9 a.m. expansion candle, because at this moment in time, when this candle was printing higher, maybe I could have maybe taken up a trade expecting to see higher prices, and what you can see is price pushed higher, then rejected lower. With this rejection, what we know is we have bullish fair value gaps going higher. If we can go onto the 1-hour time frame, since from the 1-hour time frame, what we will be having is a more bearish argument, because the long week of the 4-hour time frame is we have this bullish fair value gap that was formed, and this drop from the 15 minutes time frame, we can see we had a displacement going lower, so fair value gaps dropping, going lower. So at that moment in time, what I should have done is maybe wait for price to show me that we are indeed going higher. And what do I want to see is I want to see maybe a formation of a bullish order block being confirmed. So I want to see prices closing above this high. Want to see prices closing above that high, and want to see some nice displacement above that level. So if we have a nice displacement above that level, then this range will be ideal for me to catch. So I need patience at around with the next 4 hours. So we'll play one candle. What we've noticed is price did drop lower below that 1-hour daily fair value gap, and we tapped into that OTE levels. We have swept all these liquidities resting below there. We have that 1-hour bearish fair value gap that could push prices going lower. So we don't want to engage in any bearish prices, because long-term wise we are bullish. So wait for price to close above this level so that we may engage. So currently we saw the first candle dropping to the OTE levels, staying out, then we are kind of pushing. Then the next candle, what is saying is a push going higher and kind of disrespecting these 1-hour bearish fair value gap. didn't confirm that fully. We haven't fully disrespected these bearish fair value gap. And if we go to the 4-hour time frame, what we'll notice is that price had already stung into that daily the weekly OTE levels, right? We had it as a bullish engulfing candle. We have rallied deeper into this fair value gap. We have already stung into this order block. So we had an order block there that prices reacted into it. And then we have displaced higher. And what are we seeing from the 4-hour time frame? From the 4-hour time frame, after we have stung into that level, we are forming a bullish engulfing candle. We had a bearish engulfing candle here because it had already cleared the prior candle's high and closed below the opening and the closing price of this level. But why didn't I actually trade that thinking that price is going lower? Because the higher time frame context isn't bearish. The higher time frame is I'm bullish, expecting price to reach to this level, and then long term I'm expecting price to deliver to this high. So we are having now the 9 a.m. candle printed higher, forming that bullish engulfing candle, also of this daily the fair value gap, as well as the 0.5 weekly level, right? So what we want to see is of the lower time frame, we can also try to have, remember we have already traded below the 0.5 level. I'll get rid of that fib, but this will be our first target. Other than trading, expecting the market to rally to this, yes, we are expecting the market to rally to this high, but before that we will be passing through that level. Now we have used the 0.5 level of the weekly engulfing candle. Now we have formed a 4-hour engulfing candle. We have that low, as well as we have these high. So these are bullish engulfing candle because we have seen this candle sweeping the prior candle's low and also closing above the opening and the closing price of this bearish engulfing candle, which is now aligning with our higher time frame context area. So our higher time frame context area. So with that, I can include the 0.25 level. Where do we yeah, let me put on one, ensure these turn that to 0.25, right? And we can have it as purple. Exactly. So we have these engulfing candle, and what I usually want to see of a bullish engulfing candle is either sting into the 0.5 level or the 0.25 level or the 0.5 level and continue higher. With this, let's see what the 1-hour time frame has. Trying to align the higher time frame with the lower time frames. That's what actually we want to see. So from the this lower time frame, which is the 1-hour time frame, we have the 0.25 level at this moment in time. Could we really have us thing into it before we start displacing higher? Remember, we want to see price displacing above this high so that we may engage going higher, because we have swept liquidities, we are at a key level, and currently we are respecting it. This fair value gap isn't really doing its job, because if a fair value gap should do its job, it should have us thing into it, then displays towards this low. But what we saw with this candle, we stung into it and then this candle displaced higher. So we want to see price either sting into this 0.25 level or the 0.5, then we start displacing higher. But more, I'm expecting the 0.5 to be stung into. Then if we see displacement going higher, we can engage. We have stung into that 0.25 level. We want more confirmations to get involved. Consolidated there, and that's on Monday, and by 23 we want to see how the daily candle would have printed. So the next candle displaced higher, but we want to see displacement with fair value gap. We don't want to see those small candlesticks. consolidated around the 0.25 level, then we displaced, but remember, we want to see displacement above this level as well as this level with fair value gaps. Formed a fair value gap, which is a nice thing, consolidated at that point, then the day came to a close. So if I was to be trading this day, then it's a day for me to could have actually not seen a trade printout. So with that, we can get back to the daily time frame, see how did price print out at around the daily time frame of that fair value gap. What we are noticing is we had a deep retracement. We had that fair value gap, but because of these, remember, we had a single bearish argument, and that didn't actually change our mind that we are expecting bearish prices. We are expecting bullish prices towards this high and long term towards these highs. But before then, we also anticipate to see price deliver through these highs. Let me have them labeled. So this can be our next target before even price delivers, right? So that can be the next target before price delivers to that weekly high. And what can we see is price delivered deeper past this daily fair value gap, but also you can see that fair value gap was respected because this candle closed above the midpoint of that. Also, we are respecting these order blocks, but we rallied deeper, tapped into this last down close candle, and we did have that nice rejection. And always whenever we have a rejection is we have bearish fair value gaps and also that are being disrespected with bullish fair value gaps. Now we have another high to target, which is this high. Before also this high, we have this previous high, previous candle's high, or the previous day's high that we can target first. Then we can expect to see these highs being delivered. But before that, let's see what the 4-hour also has. But from the daily, what we've seen is we are seeing that daily fair value gap being respected, right? Is a respect array after we have seen the candle closing above that daily fair value gap, 50% of that daily fair value gap. So of the daily time frame, what you're seeing is of the 4-hour, price staying into that 4-hour fair value gap, and then we pushed higher, though it looked like was kind of consolidation. But what we saw at the end of the day is this candle closed bullish, and we closed bullish. We had these bearish fair value gaps that seems now to be fully disrespected, and now what we want to see is higher prices. And somehow can we expect to see maybe during the New York time? So with this price action, I'm expecting maybe a push, then maybe we can have a continuation during the New York time. So let's see what price has for us from the 1-hour time frame. In that kind of scenario, I couldn't really actually wait for the New York session. If I have anything prior to that, I will engage. So what we're seeing is that as this candle was closing, what we saw is we had that fair value gap confirmed. The market displays we are closing above these levels. Now I want to see if a fair value gap is confirmed and displacement above these levels, then we can engage. So I'll get rid of this fib level because we have lots of markups, but the essence of this fib level was to see how price reacts either to the 0.25 level, which is this purple line, and also the 0.5 level, which is the 0.5 level. Having gotten rid of that, we have now clean charts. It's nothing much, and that's how I usually utilize my fib. And now what you're seeing is fully disrespect of this bearish fair value gap, because we have seen this candle closing with displacement above that. We had this fair value gap that was actually traded into, wasn't really traded into, and this did displace. Want to see if we confirm a fair value gap. We didn't form that fair value gap, so still not engaging until we have price forming a fair value gap of which I can engage. So we had that drop, push high again, then consolidated kinda. So the 4-hour candle has been printed. I think this was a 1 to 4. So we want also to see how the next candle will be printing. But before then, let's observe whether the 4-hour time frame is confirming a bullish fair value gap. So at that moment in time, we didn't actually form that fair value gap. We haven't formed that fair value gap. So we wait for more prices. Wait for more prices until a fair value gap is confirmed. So we play 4 candles. Now what you're seeing is price did expand. We are kind of closing above this order block. Want to see if a fair value gap is confirmed, and this around the 7 a.m. candle, we can see we have a fully fair value gap being confirmed, and now we have that level being displaced. So if we see since we have seen that displacement above that level, and also the daily target have been taken, now at this moment in time I can look for prices going higher. And where do I really want to take my position? Should I wait for price to deliver into this fair value gap? Remember, we have one more candle before the 4-hour candle closes. So at this moment in time, I can decide either to take my trade at this moment, but ensure that the fair value gap is actually counted in before, because the next candle might open, drop into this fair value gap, and then we continue higher. So at this moment, knowing that the market will be expanding, right, and we are now in this expansion phase, we might continue. Don't actually want to miss a trade. But so what I'll do is immediately this candle closes, I'll take my buy position, but ensure my stop has covered that fair value gap of mine, right? We have that fair value gap, and ensure I am having either a 1 to 2 risk to reward. But also, if anything shows up, I might also add another setup, because this is the long-term target. So this level is the long-term target. This level is the first target, and then this is where we want to see price delivering to. So at that moment in time, I have to play one candle, right? So immediately that candle closed, we didn't tap into that 4-hour fair value gap, right? That one, this 1-hour fair value gap, we didn't actually trade into it. What we saw is a drop lower, then we had that expansion going higher. And now if we go back to the 4-hour time frame, trying to see what had happened, is the 4-hour right now doesn't have a fair value gap, right? At this moment in time, we didn't really have a fair value gap. If we had waited for this candle, the next candle to close, then to take a position, then we can be maybe entering kind of late into the move. So we have that nice displacement going higher, and remember, we are expecting a price to deliver to this high and also this high. I'll get back to the 1-hour time frame, and that is during the New York time, right, when we have expansions going higher. What I usually dislike is during the London session, you can see we didn't really have those moves going higher. The moves started late after the London session. So we have that 1-hour candle formed. We dropped lower, we confirmed this bullish fair value gap. For me to add into another position, I'll not add it immediately into this fair value gap. I want to see this fair value gap being respected, then the market closing above this high with also another fair value gap, so that I may engage. So this around 9 a.m. we saw a drop lower into that a fair value gap that was formed. But remember, this is the first hour of the second hour of that 4-hour candle. So let's see. Then the market pulled back, reacting. We saw market reacting to that 1-hour fair value gap. We respected that 1-hour fair value gap. We pushed higher. We don't actually have any bearish fair value gap at that moment in time. Let's see what the market will do. Remember, I will add into another position if the market closes above that high. And today is on Tuesday. I will be closing 23. Market consolidated at that point in time. We are in drawdown, and finally let's see how that daily candle closed. All right, so the next candle is what we saw is we had that candle expanding higher, then we did reject, and now what we have is we have this immediate rebalance level, of which I will be watching to see how price reacts to that level. Can we have a sting into it? Then we continue higher. Also, let's observe what the 4-hour time frame is doing. Gonna be a long video, but yeah, it is what it is. So wherever we have our stops are kind of safe. We don't actually have a 4-hour swing low, but this is a 1-hour swing low. And then at this moment in time this day, I will wait for the New York time window to maybe show up. So I will maybe be off the charts until 8 a.m. New York time. So I will just play the 1-hour time frame, and see what the market will be doing. So we had that drop on Monday. Remember, this is the immediate rebalance level that maybe I'm expecting to see the market react off of going higher. So, and the New York session, I want to see that 8 a.m. candle. Market pushed higher before then. We have bullish fair value gaps being formed and being respected before that moment, and oh no. All right, so at this moment in time, this candle is the 7 a.m. candle, and if I get rid of this price action, so remember the 4-hour candle closes at around 8 a.m. so if we go back to the 4-hour time frame, what we can notice is that the market had already stung into that immediate rebalance, the daily immediate rebalance, right, at that moment in time. Then we pushed higher with this candle forming a bullish engulfing candle. With that, it's a confirmation that to me, I'm expecting higher prices. And now at this moment in time, can I actually add into another position? I think it's ideal because the 1-hour time frame would have already confirmed kind of a fair value gap, of which I will engage going higher. So of the 1-hour time frame is price had dropped lower. We didn't sweep that low. That low is still maintained. Market expanded. Play one more candle. We have formed that fair value gap. It's a consolidation, a candle. Yes, we might see a sting into that fair value gap, but for me, immediately the fair value gap has been confirmed. I will look for a long position immediately that candle closes, but ensuring that my fair value gap is catered for and my stops below that low, and ensure I'm having a 1 to 2 before the market reaches that level. Yes, I can maybe have this position, ensure that my TP is at this level, but for the first one it must be a 1 to 2, and my thinking is we can have a sting into this fair value gap, then continue, but we usually want to take if the fair value gap has been confirmed. So we had a sting into that, then the market expanded, and you can see it's a shallow sting, right? Then the market pushed higher. We had a drop deeper, but that's where my stops are very safe. I usually want to have my stops at a 1-hour low. Then we have a bearish fair value gap, which is not a good sign, but since we are bullish, we can go through it. So we have that. Then the market disrespected that bearish fair value gap again. We did have consolidations, and I want to see at around 23 so that we may go back to the daily time frame and observe the price action. So at that moment in time, it's around midnight, so we can go to the daily time frame. I know. All right, the daily time frame, what you can see is the market opened. This was the day we formed that immediate rebalance. We displaced higher. We have confirmed that daily change in state of delivery, which is a good thing, or a daily order block. Now, can we expect the continuation during the rest of the week going to that point? I think so. And what does the 4-hour time frame tell me? The 4-hour time frame, we are really consolidating a lot at that moment in time. We are consolidating a lot, but our stops are kind of safe, so I think I can play out until during the 9 a.m time window. These are kind of swing trades. These looks kind of swing trades, not intraday trades. So we have 2 trades running with proper risk. I think that will be cool. So until that dotted line, that's where the New York time window starts. The market displaces before that. We push higher. We had a small fair value gap being formed there. So if we close above that moment in time during the New York session, I could also anticipate maybe to add another position during the 8 a.m candle. We consolidated a bit, and then before that, before the New York window opens, or the 9 a.m candle opens, what we'd seen is a displacement above that level, and now we are in profit. And I think for the first trade, I will be trailing my stops to break even, and the second one will be still running. So since we have confirmed that bullish fair value gap, and also closed above that level, this around 7 a.m, want to see how the next candle, I will maybe add another position, right? Maybe let's see another position with kind of a small risk at that moment. Immediately that fair value gap has been confirmed, with maybe my stop below this swing low, that this fair value gap, this low that respected this fair value gap, and also have a 1 to 2 before the market delivers to that high. So a drop into that, then we had a sting into the fair value gap. I think this is now the first hour of the New York time window. Drop lower, which is not a good sign. Drop deep lower, lower again, then the market displaced higher, consolidated. We are consolidating around this point. Since no clear fair value gap is formed at this moment in time, we are in drawdown. But sometimes, always don't be afraid, because you can see the market, immediately we entered our buy, we pushed higher, we dropped, but having a stop at the perfect moment helped us not to see our SL hit. Also this one, I'm seeing same to that one. So wait until 23 so that we may observe what the daily time frame is telling us. So we consolidated around that in drawdown for a while. Then at around 23, I want to see the daily. Yeah, we closed the day at around break even. So if we can go back to the daily time frame, yeah, we saw what we did. So we see is play one more candle, is the market is displacing higher. We created that immediate rebalance, and then we pushed higher, but we also have that rejection. If we monitor the 4-hour time frame, we have 3 trades running for this week, but either way TP is yet to be met. What I usually want to see is all the maximum trades I want to take for the week are usually 6 trades. Don't want to exceed 6 trades. So at this moment in time, from the 4-hour time frame, we noticed we had that drop into this 4-hour fair value gap at that moment in time. Then the market pushed higher. This candle has closed above this down close candle, confirmed a bullish order block, which is a nice thing to see. So at around, play one more candle, what we saw from the 4-hour time frame, we pushed higher. The first TP is around to be met. So if we play until the New York time, but I will go to the 1-hour time frame. See, now the trades, both trades are in profit, and we can see why the market had displaced lower. So if we see the 1 hour time frame, we monitor the 1 hour time frame, this drop going lower we are noticing is a drop into the 4 hour time frame fair value gap, 4 hour fair value gap, but also our stops were kind of safe. We are in profits now. The market is forming bullish fair value gaps that are being respected. We also have other order blocks being formed and they are respected. So with that, want to see around the New York time if we have fair value gaps, or so that we may add another position. The market pushed higher, these order blocks are being respected, the market is stinging into this fair value gap and then displacing, consolidated a little bit, then the market dropped during the New York Open. And what might be the reason maybe of the 4 hour, we might have confirmed that bullish fair value gaps, but I still have my stops at this low, maybe trail them towards this swing low that could have formed, but not really to break even. Then what happened next? I think we had news during the 8:30. We stung deeper into the OTE levels of this price leg, and then we rejected higher, which is now a nice thing to see at this moment in time, because we have closed above this candle. Maybe wait to see how the next candle prints. We have this next candle that did displace higher. After seeing this rejection, now my stops could be at break even and also wait for a fair value gap to be confirmed. We didn't really confirm that fair value gap, so no need for me to add a position. Now TP1 and TP2 have actually been met. Let's see, not really. TP trade number 2, TP yet to be met. We had that consolidation, we had a drop again lower. At this moment we didn't have any fair value gap to attract the market going lower, but from 9, 10, 11, 12, I'll maybe see what the 4 hour time frame has at this moment in time. Let's go back to the 4 hour. If we have a fair value gap, yes, we can expect us thing into it, then a continuation going higher. Right, we saw the 4 hour was expanding, the 4 hour was expanding, so we don't have any fair value gap maybe to push the market lower. So we'll get back to the 1 hour time frame. All right, we keep waiting. All right, we don't have any reason for the market here to drop, so we also don't have any reason to take out our position, as we have our targets at that level. So the next candle dropped, we continued dropping, then we saw that pull back again, and I want to see how the day closes at around 23. So we're having that fair value gap. Am I expecting to maybe take a short position of that fair value gap? No. Since it's a bearish fair value gap, doesn't mean that we will be going lower. So again, market, this fair value gap, if it's a bearish one, then we want to see market displacing below these lows and then going lower. But what we're seeing is this candle did have a sting into it. We had a rejection, but again we are pulling back. So doesn't mean that whenever we have a bearish fair value gap we are trading lower. We drop lower, we saw that liquidity is being swept, or the swing low being swept. Let's see how the market, we only had the sweep, then we pushed higher, consolidated at that moment, then oh no, want to see how the next candle closed right there. So if we go to the daily time frame, what are we seeing? So of the daily time frame, what we can see is we have our target at this level, and it's on a Friday. So the week has closed, and what we could have had is the first TP and also the second TP actually being met, right? So if we get to the back to the 4 hour time frame, I think so we could have had 2 positive trades yeah, at 1 to 2. You can see it was 1 to 2. So it's always ideal to have an exact 1 to 2, right? So that you may avoid maybe things like this, maybe in and out. So you could have held that trade there, but since this is the long-term target, let's see what happened on Sunday and on Monday. We dropped deeper with this first trade. We had it in drawdown, but because it was at break even, I think with this push I would have moved everything this final trade to break even. Then we saw that retracement. It's on a Monday, we expect things like this. Then maybe around that point in time, you can see fair value gap starting to form. We have that bearish fair value gap, but I'm not really expecting to see a drop of that. I want to see continuations going higher. We had a consolidation at that moment. See what London pushed lower, and then during the New York time, what we saw is a push going higher, closing above that consecutive down close candle. Can we have a fair value gap being formed? Not really. We still wait. Market. This is the 4-hour time frame, and guys, we are on Tuesday now. Want to see a fair value gap being formed. We have a fair value gap that has been confirmed at that moment in time. So at this moment, I can take another long position, and that's around after the New York time. So this during the London session. So I can actually wait during the New York, but with this fair value gap being confirmed, I can take my buy position there, but ensure that I have a stop somewhere safe, and ensure that I will be having a 1 to 2. So at that moment, though it's during the Asia session, but it's a swing trade, and also it's on a Tuesday, so we can expect a sting into it, maybe attaching to the order block, also a fair value gap. Then we see price delivering to this high as well as to these highs. We pushed higher, didn't really tap into that fair value gap. We have confirmed another fair value gap. Now we have stung into it, and now the market rejected higher, and this was during the 9 a.m. candle. So during the 9 a.m. we stung into it, displaced higher, we consolidated around that moment in time. Then finally what we could see as of Thursday, I mean, we can see the market for this final trade could have hit, but it could have closed at break even. Then we have that one trade running the whole part of the week. So it's on a Friday, we did close. So for this week, I think one trade could have done could be maybe ideal, but also, can you wait for a week? Can you have a single trade for a week? And that's why I usually love trying to catch. Also, I can have a swing trade, but also around during the New York time, I can have a trade position of this fair value gap, have a quick 1 to 2, and then this long term can just be there waiting. So we saw the next week the market dropped and then consolidated a bit. Then we could see around this moment in time was on Monday during the New York session. We could maybe have a sting into that fair value gap. We have a sting, then we capitalize on the push going higher, then the market displays going higher, and this trade could have actually been met. Let's see whether the final target, this one, was actually met. Consolidated around that point, then we pushed, and finally that level, we are yet to meet that level. Market rallied deeper, and that's why it's not ideal for me to be targeting this level. You can see we have lots of pullbacks. Instead, take your 1 to 2, then again maybe wait for another opportunity that will eventually take you to that level. And finally what we can see is the final target was met. So what we can learn at this moment in time is always, whenever we are having, just take your 1 to 2s, other than expecting to see this level being met. Yes, it will give you other positions. You can take a position here, take a 1 to 2. Then as long as you know this is the long-term draw, you can be maybe taking advantage of these pushes. It gives you another 1 to 2, another 1 to 2, and finally if you get at this level, you have another thing. So that's how I think I should be refining my swing trades, because I've seen my swing trades have been a challenge to me, but I think it's time, sooner or later we can get better at it. And if we go back to the weekly time frame, because that has been a weekly target that I have been expecting to see the market deliver to. Let's see how the market would have delivered to that high. All right, okay, so this is the high, this is the target that we could have had, and at this moment in time you can see we would have gotten more trades in between, but finally the target was met. And this was the candle we were trying to get earlier on, but also individually we're gonna be trying to intraday in the next video. Let's see whether an intraday, how we could take advantage of intradays position, because this has been swing trade. So until next video, see ya.